Whilst the future looks bright today, the economic and financial crisis is having significant negative impact on the solar industry. But we expect those impacts to subside over the next 3 years. Where we see it, there are 3 major challenges. Financing. The project finance market remains ostensibly closed, even for the strongest credits and the highest quality projects. Where there is still some lending, costs remain high. Short-term liquidity and the availability of working capital are also a constraint. We need the help of the new US administration and governments in other key world economies to preserve the momentum. I'm sure you're all inspired by President Obama's explicit support for harnessing the sun and the winds and the soil to fuel our cars and run our factories. Support for financing as part of a broader incentive package for the solar industry would underpin this momentum. Secondly, demand. We expect solar demand and the growth of solar demand to decline from the 60% plus we saw in 2008 to around 20%, the bottom end of the historical range. The underlying cause is, of course, the contraction of the macroeconomy, which impacts disposable incomes for consumers, financing for installations, and investment budgets for commercial customers. Interestingly, on the positive side, order books remain very healthy. This signals continued support from customers, although many are taking a wait-and-see approach in the hope of achieving price reductions. Today, we're sitting with an overhang of product and excess capacity. This further fuels the expectation of price cuts. And then the third challenge, margins. The industry is expecting substantial reduction in silicon prices and other key commodities such as glass and steel. Suppliers are beginning to reduce prices, but there is much more needed. For non-US dollar markets, particularly Europe, the local currency or weak local currency is impacting margins negatively. This is because most materials are US dollar denominated and revenues are earned in local currency. And the proliferation of new market entrants has increased competitive intensity substantially. The industry also has a poor track record for anticipating and forecasting market changes, whether it's polysilicon supply-demand or the required capacity growth. Because the economic slowdown and its consequent impacts were not properly anticipated, inventories have expanded, and we're seeing some short-term selling below cost to move and liquidate inventory. This, of course, in time will create an upside, as it will undoubtedly help to stimulate yet more demand. So in summary, the long-term fundamentals for clean energy remain robust. There is no doubt as to the viability of the investment case. What's needed to secure the future is demand to continue to be stimulated through government incentives offset by cost reductions, technology investment to reduce cost per watt, policy support to bridge the gap until the industry can stand on its own feet. This could take 5 years, say, with a sliding scale decline in incentives to match. And then fourth and finally, banks, venture capitalists, public and private investors have to return quickly and at scale to fund the industry's growth. And that is probably the most critical issue of all. The 5th Cleantech Investor Summit has the potential to be a landmark event for the future of clean energy by signaling the return of bold investors. Thank you.